Good morning, ladies and gentlemen, and welcome to the presentation of our first half results. I'm Raffaella Luglini, Head of IR and SRI. For the presentation today, I'm pleased to have here with us our CEO and General Manager, Mauro Moretti. He will show you how we have been delivering on our industrial plan. And later, he will update you on progress on some of our key strategic priorities and step forward. Our CFO, Giampiero Cutillo, will take you through the detailed financial results and the outlook. And then, at the end, we will welcome your questions. I will now hand you over to our CEO.
It's no problem. Good morning. Without ladies, unfortunately. Good morning, gentlemen. In January, here in London, we started with you our new 5-year plan to strengthen this business with an industrial plan to deliver meaningful improvement in profitability, cash generation and capital structure, and to develop this business with a strategic plan to streamline the portfolio and to organize ourselves to achieve more with it, all aimed at restoring competitiveness and creating value for shareholders. We are only 6 months into this journey, but we are making good progress toward our objectives. Our industrial plan has delivered strong results in the first half of 2015, with first half return on sales up 210 basis points, increasing from 5.4% to 7.5%, supported by a significant recovery in profitability in our defense, electronics and security business. With a positive net result before extraordinary transaction of 91 million, more than 150 million higher compared to the first half of 2014, where we had losses, thanks to the significant step up in EBITDA and the reduced below the line cost. And with an improved free operating cash flow performance at this stage in the year, although this game is still played in the fourth quarter. Our industrial plan is also helping us to execute on our financial strategy to strengthen our capital structure, currently with what we promised, with the effective buyback of some of our bonds and the renegotiation of our revolving credit facility on better terms, leading to lower gross debt and reducing financial charges in the year ahead. Meanwhile, our strategic plan is on track to develop a more cohesive and effective Finmeccanica. The agreement for the disposal of the transportation business in the first half was the key step in creating a focused aerospace and defense company. But we have also introduced incentive scheme for executives focused on shareholders' value, ensuring so alignment of interests. But, above all, we are on track to become a one single company with a new and more coherent group industrial and commercial model delivered through a new division structure. You will have seen yesterday's announcement of the Board of Direction approval of plan to either merge or partial spin-off fully owned subsidiaries as part of the divisional process. So we are delivering on our promises. But it is very early days, and we remain focused on delivery of the guidance that represent the major milestones for stronger Finmeccanica, ensuring that, first and foremost, we deliver on our 2015 guidance. We are on track, but with the seasonal weighting of the business to the second half, we remain fully committed to try to meet our target rather than looking to set new ones. Looking beyond this, we continue to target more than 150 basic points of improvement in return of sales by 2016, fueled by the step change in engineering productivity, supply chain optimization, and manufacturing efficiency that will take Finmeccanica back to high single-digit margin. Whilst ensuring that this improvement in profitability also results in more consistent and less volatile net income and positive and growing cash flows, supported by a rationalization of investment and lower working capital. This industrial plan has established a clear framework from the business. It is now all about delivery, and we have made a good start, but we must keep pushing. With that plan fully formed and in execution mode, I am now personally very focused on the very important changes required to develop a new Finmeccanica. Detailed plans have been developed to move to a single operating company with a divisional model, and we will execute through the second half of the year. And the new commercial market model is on track to be finalized by the end of the year. I will talk more about both of these later, immediately after Giampiero in the presentation. Finally, you know, this is fundamentally a bottom-up turnaround plan, and we continue to assess the portfolio, and we will take opportunities when they arise. Although I would reiterate that we are in no rush. We have lots to be getting on with. Before I hand over to Giampiero, I want to mention one recent key achievement. I want to take this opportunity to remind you that our priority is to design, produce, and deliver great products for our customers. And that innovation, engineering, and manufacturing capabilities remain the lifeblood of the company like Finmeccanica. Here is the Augusta Westland 169, and this is a great example. It received the EASA certification in July. It is the first new helicopter type in its category for over 30 years. And it is an outstanding machine, reflected in almost 150 orders worldwide. Given our history and the need for a detailed turnaround plan, we are very focused on efficiency. But you can rest assured that we will not forget about the need to deliver greater products like this for our customers. With this message, I would like to hand over to Giampiero. Thank you.
Thank you, Mauro. Good morning to everyone. As you have heard, we are doing what we said we will do. The execution of the industrial plan is definitely on track. And this is very much visible for the set of financial results. I want to start with some comments on our overall performance in the first half 2015. Then I want to show how the progress of our operating business has actually driven this performance. And then I want to cover some recent financial achievements that strengthen the capital structure in line with the industrial plan and the financial strategy. Then reaffirm our confidence in our 2015 guidance. So starting with the overall performance, we are pretty much satisfied with the results achieved in the first 6 months of this year and the progress we are making. As you can imagine, our results have been impacted by the positive effect of the exchange rate that boosted the results we were expecting. But even allowing for that, we are pleased with our business performance. The key points to note are that new orders and revenue are in line with expectations. We have achieved a material step up in profitability. EBITDA is up 45% year-on-year, and the return on sales is now at 7.5%, mainly thanks to the improvement that we got in Selex and DRS. And we have achieved a positive net results. The free operating cash flow is also moving on the expected right directions, with an improvement year-on-year and positive free operating cash flow in the second quarter for more than 100 million. So we are absolutely in line with our journey towards a more robust Finmeccanica, with visible improvement and progress. And this is why we are reconfirming our guidance for the full year 2015. In parallel, we are also executing our financial strategy, as you already know, with some good step towards building a more solid capital structure. We have reduced the gross debt, and we expect lower financial charges over the next year, thanks to the successful bond buyback and the better terms in our RCF. So turning to order intakes. New orders were essentially in line with our expectation. Overall order intakes in the first half was satisfactory, in the range of 5.5 billion euros. Notable was the improvement in DRS that is confirming the positive trend that we highlighted earlier this year. Also thanks to the favorable forex effect. Selex and Defense System both performed strongly with good order intakes, benefiting from a significant order from the naval system under the Italian national programs. Helicopter and aeronautics are lower year-on-year, as expected. But this is also due to a very large order booked in the first half of last year. And as you know, order intakes is not really linear, but we are pleased with both the level and the wins we have achieved. So to sum up, all the business are on track. Next, revenues. No surprise, basically, here. We were on track as we expected on the first half. Overall group revenue is just under 6 billion euros and is up from the 5.7 billion in the first half last year, entirely due to the positive effect of the exchange rate. DRS revenue moved up from 600 million to 765 million, with the signs of recovery, even excluding the forex effect. Aeronautics was essentially in line with the first half last year, as well as helicopters, and Selex, excluding also the exchange rate effect. All the operating companies are in line with our budget figures. Moving to the operating profitability. The EBITDA was 450 million euros, and as we said, up 45% on year, and has been the results of an improved operating performance throughout the business, mainly, as we said, in defense, electronic and security. The fact that the first half of 2014 was affected also by the famous provision of the $100 million in DRS due to a specific problem in a contract that now has been fully sorted out. We got benefit from our cost reduction initiative, and there is also a positive effect from the forex exchange, which is in the range of 20 million euro. All our profitability indicators showed the solid improvement. You can see this in the return on sales and at the EBIT level too. We achieved a group return on sales of 7.5%, which is more than 200 basis points up on the same period last year. Looking at the operating performance of the businesses, the helicopters were in line with last year with an EBITDA of 260 million and maintain its strong profitability with a return on sales above 12%. Selex was up 72 million and ahead of plan. The key drivers here have been the gradual recovery in profitability in certain business areas, the benefit associated with the restructuring plan, and the better industrial performance, also thanks to the actions that we put in place to improve engineering efficiency. DRS also showed that it has completely overcome the issues experienced last year in the famous program of the air cargo handling contract. It's moved back to a positive EBITDA of 44 million euros, thanks to the benefits arising from the streamlining action that we put in various business lines, the efficiency enhancement effort introduced last year, and the improved profitability, especially in the training and control system. Then aeronautics EBITDA rose to 86 million, with an increased return on sales of 6.1%, and this was helped by the ATR, which also benefited from some strong US dollar, and higher volume and activity of training aircraft, which more than offset the lower contribution from defense and transport aircraft. So overall, we are one more time pleased with the positive trend in EBITDA and profitability. All business improved performance and were aligned or better than expectation, with a clear sign of the benefit of our ongoing restructuring plans. Let's now move to the group bottom line. We are particularly satisfied also with the net results before extraordinary transaction, which benefited from the combined effect of significantly higher operating income, together with the lower impact of the so-called below-the-line items. This led to a significant step up in EBIT of around 93%, from 182 to 351 million. And the net results before extraordinary transaction of a positive 91 million, over 150 million higher than the 61 million loss in the first half of 2014. Turning now to the free operating cash flow. As you know, our traditional seasonality means we are still cash negative in the first half. But this year, we are seeing some benefits from the actions being taken in the operating business that are significantly reducing the overall degree of seasonality we see during the year. And so the free operating cash flow showed an improvement year on year, being negative only 743 million compared to more than 1 billion negative in the first half last year. I will now repeat my cautions that this is just the first half. And as you know, the key period for our cash flow is later in the year, namely Q4. But we are pleased with the direction of travel, which is consistent with our free operating cash flow guidance for the full year. Turning now to what we have recently done in terms of financial strategy. As you have seen, right after the closing of the second quarter, we have finalized two important operations in the financial markets that will give us significant benefits in terms of reduced gross debt and financial charges over the next year. First, we have launched a tender offer to repurchase some of our bonds for a nominal amount of 450 million euros. We did it because of the positive market condition that enable us to use in advance the proceeds we expect from the closing of the transportation deal. The target has been achieved with a redemption rate of 100%. Here in the slide you can see how the 450 million gross debt reduction is spread over our debt maturity. And then at the same period we have renegotiated the revolving credit facility signed in July last year. We have been able to obtain a much better condition with an 80 basis point reduction in the margin, now at 100 basis point above Euribor. And this was thanks to the improved group industrial fundamentals as well as a favorable, obviously, market condition. In the renegotiation, we have also reduced the size of the credit line from 2.2 down to 2 billion, extending the duration until July 2020. All in all, the results of these two operations are really significant for us. They enable us to reduce our gross debt on one hand and lower the financial interest to be paid in the year ahead, with a positive effect both P&L and cash flow. More importantly, there are a clear evidence of our commitment to achieve the financial objective set out in our industrial plan. Looking now at the full year, so far we are executing according to plan, and the first half results show progress that we were expecting. And it also means that we are more confident on achieving our full year 2015 guidance. You will remember the overall assumption of the group. And then at the sector level, on helicopters, we continue to expect a solid performance with the revenue in line and profitability steadily at the double digit. Commercial success of the AW169 and the AW189 is likely to be softened given the tough market condition, especially on the oil and gas sector. In Selex, we expect to continue to benefit from the positive effect of our restructuring effort, namely from the initiative launched in engineering and production, included in our industrial plan. DRS is expected to consolidate recovery in volume and restore profitability. In aeronautics, we are also expect to continue progress to achieve target in its efficiency initiatives. So overall, as I said, we are so far on track and doing what we say. Looking farther ahead, you will remember that in our industrial plan we set out some very clear and challenging medium-term targets. Even if we will have a much better and clear picture at the year end, so far from all the initiatives that we launched, we are receiving feedback and results that are pretty satisfactory and mostly consistent with what we planned and announced, and positive signs already visible on our actual figures. But let me remind you that these are actions that will bear fruit over time in the medium term, and right now it's just 6 months into the implementation. I will now give you some brief updates on the key stream on which we are working. As you can imagine, there are some areas where we are more satisfied than others. For instance, engineering, particularly in Selex, which is the most engineering-based and oriented company. The deep review of the processes and the organization is leading to a clear sign of improvement in the engineering productivity. The supply chain, we are seeing good progress across all the businesses, and we can see visible results in direct procurement optimization. While in improving the manufacturing performance, we have faced some harder challenging, especially in the aeronautics business. These challenges have been fully assessed and recovery actions already put in place. These include changes to management with the recent appointment of the new CEO and COO of Alenia Aermacchi. So we have moved quickly to deal with the issue, and we expect to be back on track soon. Moving to other targets, areas where the industrial plan, of our industrial plan, the key highlight is that we are satisfied with the action to reduce investment. And these are proceeding at a faster pace than the action on working capital, which is influenced by a wider range of factors. Having said that, we can reiterate our medium-term targets, and we are growing confidence of achieving them. So, finally, we are pleased with the progress on these first months of the 2015. The journey is proceeding on the right directions. With that, I'll hand over to Mauro, who will show how we are putting in place a more effective organizational structure to drive progress further. Thank you.
Thank you, Giampiero. You will all remember this slide from the industrial plan presentation in January. I want to spend some time updating you on 2 of these pillars. Taking first the improvement in our new commercial approach to strengthen our international footprint, and then, later, our new divisional model. You know, Finmeccanica is a global player with a wide international presence. The international markets are becoming more and more competitive, and we want to strengthen our presence in those countries that we consider key for our business. I am referring to the Far East, to Middle East, to Sub-Saharan and North Africa, and to the Pacific side of the Central and South America, the so-called Pacific Alliance. And to be competitive there, we have developed and we are implementing the new commercial model using a market-oriented approach. This will enable us to be more efficient and effective, to improve customer proximity, and to devote key resources to the key markets. You will all be familiar with the challenges of the past, when different Finmeccanica operating companies would visit key customers independently. And for other few months, we have the same situation. Not always knowing what the rest of our portfolio of companies were doing. In the first half, we have made good progress to create a more effective market model for Finmeccanica. We have completed the assessment of the international presence of the group. What sort of market presence do we have? Does it make sense for the business we want to do? And what does it cost? This will result in a rationalization of offices. Let me first give you an idea of the current situation. For example, so far there are more than 150 legal entities, branch office, representative offices worldwide, excluding North America. Representative offices only are more than 30, and there are a lot of overlaps due to a simultaneous presence of more than one office in each country. So we are working to merge some of them, thus reducing the number by 1/3. And this is just one example of how we are rationalizing our presence. We have also developed plans to move to a network of group representative office, which means one Finmeccanica group office in each market, tailored to the specific of that market, and ensuring that we are coordinated in the marketing of all of the products across our Finmeccanica portfolio. The priority for the new commercial model is, therefore, to be more effective with customers. And going forward, we will speak with one voice. The other pillar is our new organizational and operating model, one single company with a divisional structure. I know that you have heard a lot about governance at Finmeccanica in recent years. I want to be very clear when I talk about governance. I don't mean creating new committees and extra bureaucracy. I mean simplifying the structure that we have, ensuring that the executive can reach further and faster into the business, so that we deliver real change, integrating and decentralizing. The new decentralized structure is made up of 7 divisions. Where are the 7 divisions? That will become profit center with full responsibility at P&L level and full end-to-end accountability on the operations. The 7 divisions will be coordinated by 4 sectors based in the corporate center. Sectors will also coordinate the joint ventures and other companies that won't be divisionalized, among which is DRS, the space joint ventures with Thales, ATR and MBDA. This new structure will provide benefits thanks to greater stability to control by the corporate center, simplification, shorter chain of ownership and faster decision-making, accountability, which means that, for example, the heads of the division will be meeting with me continuously over the year to discuss the progress in the business. Obviously, I am also held by the head of sector. And the head of division will be completely responsible for the result achieved by the division, reporting directly to me. Greater efficiency and effectiveness, as we will be more flexible and we will operate more intensively. And greater integration, thanks to the coordination role of the 4 sectors. These are big changes, but we are moving fast. All of the key personnel at all levels, sector, division, business unit, program or products units, depending on the kind of portfolio, have been appointed, and we are moving swiftly to the execution phase. we will have completed the organization by the end of the year. The new one company will start formally the 1st January 2016. Now let me show you how this will look like. Let's start with the sector and their roles going forwards. Roles of sectors are now very different. They will be based on the corporate center offices. They will be primarily responsible for ensuring that Finmeccanica works as a homogeneous business made up of portfolio of products. They will help to shape policy and guidelines for our divisions, and they will perform a coordination role across our core engineering capability. Moving to the division. This is now where the real P&L responsibility is, at their profit center. One level down from where it was before, but closer to the real business where there are more clearly defined and markets or customers. There can be absolute responsibility for the end-to-end process that will deliver for those customers. And going forward, there will be absolute responsibility and accountability for delivering. All this aimed at providing the most appropriate level of granularity and visibility to improve both quality and speed of decisions. At this divisional level, there has been some realignment of businesses to ensure they are able to deliver more effectively for customers. There have also been significant changes in key personnel. I am confident that we now have the right team to execute the plan after the changes of this year. More than 200 executives. So to conclude, the execution of industrial strategy is on track, with a sharp focus on key industrial processes, engineering, supply chain, and manufacturing. We are strengthening our financial structure, and the changes are delivering continued momentum in our financial performance, allowing us to reiterate our full-year guidance, and we are increasingly confident of delivery. We are also increasing the effectiveness of our global commercial footprint and continuing to focus our effort on a more cohesive and effective Finmeccanica One Company, with a clear focus on creating value for our shareholders and for every stakeholders around Finmeccanica. Thank you.